Let's talk a little bit more about the income statement, also called the profit and loss statement or the operating statement. The point of this financial statement is that owners and the other stakeholders in the company need periodic information about how the company is doing in terms of profitability. The income statement shows revenue and expenses for a given period, and also what profit is left over. So let's talk about the major line items of a sample income statement for a hypothetical A&D company. And just real quickly, here's an important concept to keep in mind about the income statement. It's done for a specific period of time, and you're matching the revenues that were generated in that period of time with the expenses that were incurred in that same period of time, the expenses that it took to produce and sell the stuff that you sold. And that's called the matching principle. And the top line of this income statement is net sales. And that's the total amount from customers during the period for delivery or sale of the goods and services that you sold, regardless of the way that it's paid. And that's really important because accounts receivable, which we'll see on the balance sheet, are also included in the amount of revenue, not simply cash that was paid. And sales, as you can see noted on the screen, for an A&D company are mainly the sales coming from the programs that we're running at the company, all added together. And net sales means that some things are subtracted from gross sales, which is sometimes shown as a separate line item above net sales. And items such as sales discounts, returns would be in between gross sales and net sales. Our next line item is cost of sales. Cost of sales are direct expenses. They're the actual cost of work performed, mostly labor and materials tied to the units of product or the service that was sold. And PMO or program management office expenses and engineering expenses, and even sometimes direct depreciation for machines or tools that were only used for that specific program, might also fall into this bucket as well. Next line is admin and selling expenses. Here's a list of some of those items. And we've got research and development. These are investments for the future of the company. Internal research and development, or IRAD, technology investment that will help your company get to the next level. And we'll subtract those from net sales to come up with something called operating income, or EBIT, earnings before interest and taxes. And it's a key number, and it's called operating profit specifically because it tells stakeholders how well the company is operated from a profit perspective. So interest, extraordinary items, taxes are typically corporate level items, and they're out of the direct control of the day-to-day management and the day-to-day operations of the company. So it's shown as a subtotal. And EBIT gets a lot of attention from stakeholders because it really does reflect directly on how well the business is being managed. And then we have interest expense. This would be interest on loans that we've taken on. But it could also be interest income if we're making money on some perhaps investments that we have. And then net income is what's left over after expenses and taxes are all taken out. Net income can go to one of two places. Dividends, which are not expenses, but are a distribution of the profits of the company to the owners, of the shareholders, and retained earnings, which are an equity line item that we'll see on the balance sheet. And just a side note detail here, dividends are actually paid out of cash, but they're balanced by reduction in retained earnings on the balance sheet. And another point related to the income statement, it's important to realize that the income statement is, for many companies, not just done on a cash basis. That is, profit could actually be different than cash flow. And this is for several reasons. We've listed a few of them here. So the point is, profit is not always the same as cash flow.